One of the most powerful ICT concepts is actually one of the most misunderstood. Turtle soup gets overcomplicated by everybody that covers it, which is why most traders can't recognize it. They don't know why it's important. They don't know how to execute off of it. But after using turtle soup in my strategy for the last couple years and seeing how people can get confused with this concept, I'm gonna break it down the right way it should be taught. Simple, practical, and profitable. Turtle soup isn't just buying lows and selling highs. It's understanding internal versus external liquidity and positioning yourself with institutional order flow. I'm gonna give you my complete turtle soup framework for what I look for in the market, what it actually is, how to identify it in real time, and the exact entry models that I use with it. I'll show you trade examples that I've actually taken with this as well and why it worked. By the end of this, you're gonna understand turtle soup better than 95% of ICT traders, and you'll have a systematic way to execute it properly. So I wanna keep this literally as basic as possible to what turtle soup is. Now, the definition of what I consider turtle soup is internal range to external range liquidity. So what I've basically drawn here is, imagine this high above us is our external buy side, and this is our external sell side liquidity. Now, what does that mean? The difference between external and internal, right? Well, I always use the example of a square, right? Because the markets are fractal, we basically see the same things on every different time frame, right? So it's the same thing, zoomed in, zoomed in, zoomed in, and you use higher time frames like the 1 hour, 4 hour to then base an idea, and then you go down to lower time frames to execute it. So the analogy I like to use is a square, right? Inside of that square, you have another square, but that square is basically the exact same shape, the exact same, everything as the bigger square. It's the same thing. What you want to base out of this drawing that I have is what this looks like. So internal liquidity is these highs, right? This high is acting as buy side, and these highs are acting as sell side liquidity. Now, in this range is what we call, quote, dumb money. This is where the market is just chopping back and forth. A lot of the times, if traders are trading this, they're getting stopped out. The market isn't really moving towards a direction yet. Now, in a lot of the cases, what we'll see is a turtle soup. And a turtle soup is when we take one of those internal liquidities to then go to the opposing external draw. So I know I'm using a lot of framing. Let me show you an example of what that looks like. Now, above internal buy side liquidity is what we'll call smart money, which is looking to sell. Below sell side liquidity is what we call smart money to buy. So if the draw on liquidity is lower, meaning the draw on liquidity is external sell side and the internal liquidity is chopping like this, what we'll expect to see is the market go above buy side liquidity before sweeping it and then displacing lower towards the external draw. So normally what we're looking for, and this is what we'll consider the turtle soup, where we take internal buy side liquidity to then go towards external liquidity. Now, what we also are using to frame this as high confidence is other areas to reject this, right? Other reasons that we want to reject this. So let's say to the left of us on price action, there's a bigger time frame fair value gap. So let's say there's a 15-minute, a 30-minute, a 1 hour fair value gap that we sweep internal buy side liquidity, tap into that high or that fair value gap, and then we end up continuing lower. Now, in the bullish case, it looks something like this, where the market will go lower first, sweep the internal liquidity before reversing back towards the external draw being buy side liquidity, right? And this is where we would look to see this as a bullish turtle soup, where the market comes down, takes the low, and then goes back higher. Now, again, what we're looking for extra confirmation or extra confluence is, are we tapping into a bigger time frame fair value gap? Another thing that we could be looking for is a bullish SMT divergence, right? If we're watching NQ and ES, which are correlating assets, and NQ ends up taking this low, but ES does not end up taking the low, we'll have a bullish divergence with the turtle soup as well. So the main foundation of what you need to understand with turtle soup is having a confident draw on liquidity. If I do not know where the market wants to go on the bigger time frame, it's going to be very hard for me to identify a confident turtle soup, because all it is about is internal liquidity to external, right? Going to take internal liquidity, which are these lows, and then switch to external liquidity, which is buy side, right? So let me show you a drawn out model example of what this would look like in a bullish case. So let's say we're looking at this chart, right? And if I'm looking at this chart, I'm going to have a loose understanding and say my bias is bullish. Why is my bias bullish? Well, on this move, we've been bearish this entire time and we're generating liquidity, right? Buy side's resting here. Before we finally have a internal sweep of liquidity and then a change in the state or break of structure to the upside. So now there's most likely a bigger time frame fair value gap that gets put in on this area, right? And let's also say, again, more confirmation for this would be, a bigger time frame bullish inefficiency below us, right? But what we're recognizing is a market maker model. If you haven't seen my market maker model video, I'll leave a link in the description so that you can go watch that as well. Once you can combine both of them, it's going to be really, really beneficial. But this is all about understanding and having an idea about where the market market is drawing to. So if I have an idea about the market drawing towards this buy side level, a lot of the time what will happen is we will take internal liquidity before going higher. So another thing is people always ask me, Justin, how do I know if the market is going to rebalance to equilibrium? So if I mark out this range and I mark out this as premium and discount, right? Basically, this is the midpoint of the range, right? A lot of the time the market will rebalance to equilibrium before going higher. But there are times when we do not rebalance back to equilibrium. And what you'll find is the times in which we do not rebalance back to equilibrium, we have a turtle soup. And I'll show you what that might look like. So once we've had displacement, once we've gotten through the change, right? This is where the model starts showing up and we're like, hey, we want to see the market draw higher. A lot of the times what might happen is something like this, where we'll generate liquidity before coming down, tapping the fair value gap, taking internal liquidity, where we will then take this will become our turtle soup, right? We're going lower to go higher. For the market to go higher, we must go lower. For the market to go lower, we must go higher. So we end up having that break before rebalancing back to the fair value gap, taking the turtle soup low. And again, this is where we're looking for, an SMT divergence, looking at where we are in the inefficiency. And then there's a couple ways to actually take this trade. One of them is you are looking to take it off the fair value gap or at the low once it gets taken, and you put your stop at the bottom of whatever the inefficiency is and you're targeting buy side liquidity. The other thing that you can do is zoom in and trade the internal manipulation. So a lot of the times what will happen is if we zoom into this, the market will do this, right? We'll go back lower, have internal manipulation, and then have a break of structure. So it's a model inside of a model, right? Going back to that square analogy where we come down, take sell side, then have a change in the state of delivery, and then end up continuing to the external draw. So this is normally what I would be expecting to see for turtle soup, right? Once I can have an idea of the external draw, then I can zoom in and also look for a turtle soup, which is internal liquidity getting taken. Now, another thing that you'll look for and see is, let's say on this example right here, we actually could have a turtle soup to go take the turtle soup on the bigger time frame. And what I mean by that, the market is constantly distributing to liquidity, buy side to sell side liquidity. So in this range, this right here is like its own internal sell model, where we end up moving higher, we fail to break, then we have a change in the state to the downside on the lower time frame, and then what end up could happening is this, where we kind of sell back off, and then we go take that internal high before going lower, right? This would be my turtle soup to go take this as my external draw. So the soup actually becomes the draw on liquidity on the bigger time frame, but we soup internally before going to take it. So what you'll always recognize is the reason you feel like you get stopped out and then the market goes in your favor is a lot of the times because this is what's happening, right? The market will generate an area to go back to. So like when we move back higher, we'll pull back initially, generate a low, then go higher, then go back to go take that low, which is a lot of the times where everybody gets stopped out and then goes right back in their favor. So it's not that your bias is wrong, right? A lot of the times you probably will say, Justin, my bias is right, but I can't seem to get on the right side of the market or I get stopped out. A lot of the times this is what's happening. And if you can wait for this and wait for manipulation to say that there's no reason for the market to go lower, and I want you to almost think of it as, I quote, unfinished business. The market has unfinished business when lows internally are put in place against an external draw. And there are times when this won't play out, right? Keep in mind, there are times when the market will just go straight to the buy side level and there won't be a turtle soup or there won't be a pullback. But what I want you to notice is a lot of those times when the market is like straight up, there might not be high quality opportunity. So you have to ask yourself, do you want to have a good setup and be right? Or do you want to catch every move, right? You don't need to catch every single move in the market. If you can identify manipulation, right, where a soup or where liquidity is resting and then we go take it and then have an understanding of what the bigger time frame draw is, you can get really good risk reward and really good high quality setups just by waiting for these things without trying to feel like you're going to miss out on the setup. So let me show you some real actual examples within the market of what this looks like. So I want you to watch what happens here, right? We're looking at a 5-minute time frame right now. We'll kind of switch to the time frames and I'll show you. But so far, what I can identify is this low to the left of us just got taken. So I would look to see, number one, I need to have an idea of what the external draw is. For me to have an idea of the external draw, I need to see displacement back inside the range. I need to see us displaced through some sort of swing high, right? We put a swing high in the market here. Can we start showing bullish signs of order flow? Now notice, this is kind of the first example of a turtle soup, where if we zoom in to the lower time frame, you'll see the market comes down. We put in a bullish SMT with ES, which is where ES takes this. I only know because I've seen this example and I traded this on this day. But we end up having our break of structure through that high, and then we end up generating a low, coming back to go take that low. And what do we expect to see happen afterwards? Move to go towards the internal generated liquidity that we end up putting here, right? Market opens in the overnight session and we immediately go continue higher. Now that's not it, right? Now we zoom out and we notice also what happens. Oh, another internal low got taken. So now what we're looking at and saying the draw on liquidity is definitely higher, right? We are very, very bullish right now. But that doesn't mean we can't be bearish internally. What does that mean? What's happening here? Generating lows, generating lows. What is inside of those lows? A fair value gap. And if I zoom out, I guarantee you there's also a bigger time frame fair value gap here, right? A 30-minute here, another 30-minute here, maybe on the 1 hour, right? A big 1 hour fair value gap here. So let's see what the market does. If I think that the market is going higher, I would expect us to pull back first to then continue the move higher. So let's watch, right? The market starts to open, boom. We come back down, immediately take sell side liquidity. And this is where I'm looking for a change in the state of delivery or another turtle soup. So let me show you. Watch. Low gets taken, right? On the bigger time frame, this is a turtle soup, right? Where we have now taken internal range liquidity and I'm expecting to see a move higher. And notice the lack of displacement. That's what I want you to notice. The market does not break through this, right? It doesn't just sell off through it. It comes down to take it and then immediately wick back higher. So that's when I zoom in and I look for either a break of structure to take my trade or also an internal liquidity soup. So look at what we're doing right now. Market breaks higher. We generate this as a low, which what do you think is going to become? Turtle soup. So let's watch what happens here. We have two fair value gaps right below it, one right here, one right here. So I'll just kind of combine them. And we've also had a break to the upside on this series of down close candles. So this is where I would be looking to take a long position and I would put my stop below these kind of imbalances here at this recent low to the left of us. And I would be targeting the generated buy side liquidity that we've put in. And I would also then leave a runner towards, these highs and scale out along the way. This is where risk management will come into play. I would trail my stop, but let's see what the market does here. Notice we immediately just go take this low, soup, and then go back higher. So notice it's soups and soups and soups, like it's all inside of a range and all inside of models inside of models. So if I can have a bigger time frame soup, I can look for a lower time frame soup because it's all when the market gives you a bias and tells you that this is where the draw is. How do I know that this is the draw? Because sell side gets taken, we lack displacement, we immediately get bought inside the range, we have bullish order flow, we have a change in the state of delivery. So I know whatever low that gets generated within the range, if there's an inefficiency below it, it's most likely going to sweep it and hold it. So this low gets generated to then go higher, to then go to take that low, to then continue towards the external draw. This is where I take partials. I start trailing my stop loss and I'll most likely take runners out along the way, probably move my stop to break even and kind of manage it from there. Again, also look what happens here. The market initially takes the low, tries to displace back lower, but what do we end up doing? Come down to take another low and then continue back higher. So what I want you to kind of notice from this is every move from this initial break of structure, right? When the bigger time frame sell side level gets taken here, we sweep it and then start displacing back inside the range. So all of the sell side that gets generated after the bigger time frame, we would want to expect to see a turtle soup. So the first one, low gets generated, come down, take it, gap up, continue higher. Another low gets generated, another low gets generated. We come back and take both of them. We look for the reaction. We then start moving back higher. Internally on that distribution leg, we have another soup within another soup to then continue the draw higher. So the market is always looking like this, right? In a bearish trend, we're making lower lows and lower highs. In a bullish trend, we're making higher highs and we're making higher lows. Now, during these trends, the best type of trades we can take is actually manipulation within the trend. So what that would look like is it would look like this, right? If we're in a bullish trend, we would go something like this and then pull back and then do this and then continue higher, right? So this on the bigger time frame is our higher low, but we have a sweep of liquidity, which would be considered a turtle soup to then continue towards whatever the bigger time frame buy side level is. So all it is internal liquidity to external liquidity. That is it. Keep it extremely simple. Go in your charts and start looking for it. And all I want you to do is mark your buy side and sell side, wait for it to get taken, and then zoom in and notice the lows or highs that get put in during the distribution leg to go take that draw. And you'll notice they'll get taken and they'll continue back inside its favor. So use it to understand and get entries, because a lot of the times when the market might move without you, there is a turtle soup entry that you're just not seeing. Turtle soup is one of the most powerful ICT concepts if you know how to use it. The key is having an external draw, wait for internal manipulation, and look at the reaction. When you get these elements together, you get great risk to reward. You can overlap confluences like a fair value gap, SMT, and you'll end up seeing results from it, I guarantee it. Now, if you want to take your trading to the next level and want to master concepts like this with direct guidance from me, I just opened up the exit plan. This is my complete mentorship program where I work directly with serious traders who are ready to master their own trading. We only accept 50 new traders per month. Then we shut the doors. If you'd like to apply to join the waitlist, there's a link in the description down below. But before you do that, let me share some results from some of our current members. Jay recently just had his biggest day ever, making $6,000 in our community. Cody with another funded account that just recently got an $8,000 payout from Top Step. One of my students, Hypnix, with a $55,000 payout from Apex. And one of my students, Dylan, who says this: I just wanted to say, since I joined the mentorship only a short 2.5 weeks ago, I already feel as if I have grown as a trader. I was in the YouTube live with you for FOMC, just had you playing in the background. Before I joined the mentorship, I always struggled with not only finding my daily bias and my draws, but having confidence in them. During FOMC, I felt as if I almost predicted everything that had happened, like what you were saying. I had drawn out most of my targets before coming into YouTube, and I found that I also had a lot of the same as you and wanted to see the same stuff. Although I didn't end up taking any trades, I was extremely happy with myself. I charted out possible trades as they were happening and finding that they worked out each time when I was following all of my rules. Just wanted to say thank you for you and everyone. Although I'm not profitable and still have a long journey ahead in this mentorship and my trading journey, I'm very excited to see what the future holds. I've also found from you repeatedly saying it's just about letting go and not worrying about money or the possibility of making money, and simply reacting to what the market is showing me has helped my trading a lot. These traders went from struggling consistently to executing trades profitably and consistently because they had the right guidance and systematic approach. If you're finally ready to start taking your trading seriously, apply for the exit plan. We are looking for people who are ready to do the work, who are taking this seriously. So go practice identifying turtle soup setups on your charts. Look for the external draw, notice the internal draw, wait for manipulation, use key levels on top of that, and you'll have literally one of the most powerful models. I will see you guys in the next one. Peace out.